It still won't come out. Oh gracious. I was trying not to sneeze during
thumbnail.
The thumbnail. Oh,
Oops.
and hello everyone. It is 5:03. I'll give it about 2 more minutes before I start going over the content. This is going to actually be a quick video tonight. Kayla and I both are exhausted. And as soon as we sign off, we are going to bed. We're gonna go to bed, watch movie, fall asleep. Oh gracious. You feeling all right? You still full from we had an excellent breakfast today. We went back to Husky's on 2nd Avenue in Decatur, Georgia. Now, I will say you have to have patience because you're going to wait 20 to 30 minutes before your food is ready.
Well, that was only because it was a full house.
No, that wasn't because. No, it was not because we waited any other time we've gone. But it's fine. It's worth the wait because they prepare everything to order, freshly made, fresh ingredients. You do not have to add any seasoning of any kind to anything they make. It is already made with love. You're going to have enough to take home. Unless you're really hungry and you, like sometimes we still be chewing slowly. We're full, but it just tastes so darn good. So Huskies, if you're in Decatur, Georgia, or you're visiting Atlanta, the place to go, but they stop serving breakfast at 2 p.m. So just check them out. Huskies on 2nd Avenue, Decatur, Georgia. It is HUSKEY''S. They have outdoor covered seating, nice atmosphere, good music. But they only have they have large booths. They have like 1, 2, 3, 4, 5. They have like 6 booths and 4 or 5 tables that can seat 4 to 6 people. So although it's a small space, they have incorporated enough seating to handle a decent sized crowd. The first 2 times we went, it wasn't busy at all. We were like the 4th table there, but still we had to wait 20 to 30 minutes. But again, the food is worth it. You will not be dissatisfied. I can tell you my favorites right now is the creamy French toast plate. And 2 people, whatever you order, 2 people can eat off of. Unless it's a hamburger and fries, then yeah, that's for 1 person. But anything else you order, 2 people can eat off 1 plate. So my favorites are the creamy French toast plate, the sample plate, which has the potatoes, bacon, beef sausage, brisket, excellent. Scrambled eggs, the way you want them, and toast. But I never eat the toast because the French toast is more than enough. But today, I added the creamy shrimp and grits. Oh my goodness. It was even better than my grits. So yes, try it out. All right, let's go ahead and get started. There I go smacking. Okay, I really have been thinking about me smacking my lips. And I just have to accept because my lips are so juicy. I'm really having trouble controlling my lips, but I'm still working on it. So I apologize if my lip smacking bothers you. I'm working on it. I'm trying to separate my lips appropriately before I start speaking. So Okay. Today's topic, we're going to go over juvenile life insurance. This past Wednesday, I introduced the topic of life insurance for us adults, for us parents, for us grandparents. So today, I want to go ahead and start the episode for juvenile insurance. Like I said, this will be a quick episode today. So once again, hello everyone. Thank you for returning or visiting us for the first time. I am Nneka, and this is
Kayla.
and welcome to King's Legacy Group. Before we get started, our short disclaimer. The information King's Legacy Group shares is based on our own opinions, experiences, practices, and insight into the strategies suitable to our family's financial wellness. We are not financial advisors, and our videos are for informational, educational, and entertainment purposes only. Okay? You must do your own due diligence and seek professional assistance when you find the need to confirm or expand your understanding of the knowledge on any topics covered on this channel. Always remember to make smart decisions that suit your own needs and do your own research. I keep thinking the screen is touch screen. You can view our full disclaimer on our website at www.kingslegacygroup.com for further review. What is King's Legacy Group? King's Legacy Group is a financial literacy platform that is bridging the gap between the youth and the mature adult to achieve generational wealth, providing the tools and resources to understanding financial literacy and how to change our mindset to make good money decisions from good money habits that will empower us for life. We teach the practices needed to achieve financial wellness and adapting the belief of when you learn, you grow, and then you can earn the wealth you deserve. For anyone that is new to the channel, just so you have some understanding, we do live videos on Sundays and Wednesdays. Sundays are geared towards our youth, ages 12 to 17, and Wednesdays are geared towards our mature adults. Eventually, the content of both will collide because this is about preparing our kids to grow into productive adults and have the knowledge, the skills, and the maturity to deal with life situations, know how to manage and master their financial wealth. And for the adults is to help improve bad money habits or bad relationship with money and gain the financial literacy with the same skills, knowledge, tools, resources, and maturity to grow into mature adults for retirement and live a financial level of life that you are deserving of. Okay? As always, please take a moment to click like, share, and comment if you like. Well, let me say that. Please click like and share every video. Please. Every comment. You don't have to do a comment on every video, but please do like and share on every video. And you only need to click the subscribe button one time, and that'll keep you notified of when we post our live videos. Okay? We truly appreciate it. And I hope this is showing well. Can you pull up on your phone to see if it's messing up, or the computer, see if it's messing up like it did last week? Looks clear, doesn't it? Okay. I think last week it was doing that little matrix glitch thing because I had increased the font size on the computer because, I'm getting older and, I wanted the letters to be bigger. So I think that interfered with the quality of the video last week. That's why it was all glitchy and matrix. So it looks like it's fine now. Awesome. Because I definitely want my, I won't say celebrity, my special guest for my first interview that I am giving, that's coming up within the next 2 weeks. I'm waiting on his assistant to reach out to me so that we can officially schedule the day, date, and time either this week or next week. So look out for that. So yes, I'm glad the computer's working fine now because I ain't got time to be no uh, delivering no subpar visual content on my first interview. All righty. Let's recap on some things covered so far. This is, were we here last Sunday? Was it our first Sunday back? Yeah, the first. Last Sunday was our first Sunday back from vacation. You weren't here.
I was here.
You was here last Sunday?
Yes, we did it in
Oh, yes, we did. Okay, we
that
did.
video was
We did Kayla's interview. Okay, we did. So, let's just do a small recap because again, this segment for Sundays are for our youth. Everything that we covered since video 1, and we are now on video 19. I have given you all the information you need to get things in order for your children. We can't correct things in our own lives without going back to teach our kids to avoid the mistakes that we did. So the sole purpose of having Sunday Live targeting the youth is to teach them the good habits to adapt now and incorporate into their life lessons and processes and thought process. We have to make sure they get it. If not, all of our efforts are useless if we don't take what we learn in here and change our ways here to make it better for them. But making it better for them, they have to learn it also. If we just do it all for them and pass it on and they don't know what to do with it, again, that's pointless. We've done all that for nothing because they're not going to know how to handle that inheritance, how to maintain and even grow the legacy that we leave them. I don't know if there's anything else or why it would be anything else I would need to say to convince you all as parents. Get off your butt. Stop making excuses. You had these kids, then you got to take care of them and you got to make sure they're prepared for life. That's your responsibility. They didn't ask to be here. Not going to get on preaching. Although I want to sometimes so bad. I'm like, why you don't get it? Why? Okay. Just to start back from the beginning, you should have gotten your child's state ID, regardless of their age. If they're 10 and older and you're going to open a bank account for them, go ahead and get their state ID. Open a bank account. Get their records file in order. Get all of their documents, explain what those documents are, and create that filing system for them. You should have started a custodial stock account, although I haven't given the video for that yet. I've still mentioned about doing your research so that when the time comes, you'll be ready to get started and have a basic understanding of what I'll be explaining on the videos. It was a whole list. I think it was video 4. Well, no, probably video 5, where I gave a breakdown of everything that you should have done or be doing for your child or children. So I'm not even going to go through all that. You can go back and look at video 5 and look at that breakdown. So let's go ahead and get started on today's content before we get to the vocabulary words. Or do you want to do the vocabulary now?
Now,
Okay, Kayla's going to go ahead and go over this week's vocabulary words. I'm not going to do what I normally do with the vocabulary words after she does the word and the definition and give a life correlation to what you would apply it to. Uh, at this point, I feel that your parents should be going over that with you. So I'm gonna let Kayla take over, and she picked the words that are relevant to the topic today. So go ahead.
all right. Number 1, funeral cost. Funeral expenses are the cost of organizing and carrying out a funeral. Debts that is owed or due. Income replacement, the percentage of a person working income that they need to receive during their retirement years in order to retain a steady standard of living. Sorry.
Mhm.
Mortgage, a legal argument by which
No, a legal agreement.
agreement by which a bank or another creditor
Or
other creator lends money at interest.
Okay, let's go over that again. A mortgage is a legal agreement by which a bank or other creditor lends money at interest.
Mortgage.
Okay, you
Oh, wait, it said
5.
money's gifted. Cash or a cash equivalent that an individual transfers to another individual while neither receiving nor expecting any and anything in return.
Okay, thank you.
The last one.
Oh, 6. Okay.
Education cost. Educational cost means student cost or for tuition, fees, room, and
Okay, thank you. Remember I told you about making your font size larger? Because you're going to struggle to read with it being so small. Okay? So keep in mind to make your font size larger so you won't have trouble reading. It's already a small screen. Okay? Alrighty. Today's content again is about juvenile life insurance. Life is not guaranteed, and as much as we pray that nothing mortally happens to our children, life circumstances are unpredictable. Part of being a parent is taking on the responsibility to care and protect our offspring. Every parent should purchase life insurance on their child at the age of 6 months. When your child turns 6 months old, that's what you do on their birthday of 6 months. You need to get a life insurance policy. Do not think you can't afford it. Don't think you are wishing bad luck on your child. Don't concern yourself with the uncontrollable acts of nature that can affect your child. You should only be concerned that you have a plan in place to protect you and your child's death plan. Yes, we are talking about death. You cannot shy away from this discussion. I've said several times, within a family, you need to get together and discuss a death plan, not just for the parents, but for everyone in the family. You have to discuss it. We are all going to die, whether sooner than later or naturally or unnaturally. It's bound to happen. So why not be prepared? Why add to the stress of the grief that we'll be going through worrying about finances, worrying about what the person that died left you in responsibility of? All it takes is a conversation and put a plan in writing and execute it. We have to stop making excuses. We can't keep putting things off to tomorrow because tomorrow is not guaranteed. It's just not. Kayla and I could walk out of here going to the store and get killed in a car accident. It doesn't matter that she's a good person, I'm a good person. That has nothing to do with it. It can happen. And we all know with this past couple of years with COVID, it can happen. So again, be prepared. We as adults do everything possible to protect our cars by getting car insurance. We get house insurance to protect the houses that we buy. We get renter's insurance to protect our property in the homes and apartments that we rent. When you buy stuff online, before it goes to the checkout screen, it's gonna ask you, do you want to buy protection coverage for the electronic device or the item that you purchased if it's over a certain amount of value? You quick to click that button. So why are we not so quick to get insurance coverage on our life? That makes no sense. You telling me all those um intangible things or tangible whatever the source is, you tell me that's more important than you and your family's life? Priorities, people, priorities. And I really hope that some of you parents have your kids listening to this video because they need to be asking you questions after the video over with. Okay. Um, again, we have no control over the what ifs or when we die. But the point is being prepared in the event that something does happen. Um, when your child turns 18 of having whole life insurance, whatever value of that policy or whatever the cost, the policy amount, it will double when they turn 18. So it's not just about being prepared for death benefits. And I've already given the video to break down the difference between term life and whole life. I support whole life. I don't understand why anybody has term life. And I know some of you all, now y'all sure don't know what I'm talking about, but some of you all follow Dave Ramsey. I like Dave Ramsey. And I have his book. Is right here. Yep. Dave Ramsey, Financial Peace. Dave Ramsey, The Takeover. So I've read the books and I believe and follow 90% of what he say. But not everything he says is accurate because when he's talking about the whole life insurance, uh, he doesn't have a clear understanding of what I'm talking about and what a lot of people are learning about. So we'll get on that later. So again, so having the life insurance is not just about the death benefit. It's about helping your child financially while they continue paying the premium after they turn 18. The benefits that they get from the whole life insurance policy. And again, I'll explain that further later. I explained it on Wednesday's video for the adults, but I'll recap slightly on this one. Again, as a parent, This is your responsibility to look out for your child. And what better way to set up your child with some financial security that the child can carry on into their adulthood in a lower premium? Getting life insurance on a minor, you're starting the process of paying a lower premium because they're young and they're in good health, as opposed to being older and having bad health, which is what happens to most of us as we grow older. We don't do right, we don't eat right, we don't take care of ourselves physically. So that declines our health. We go to the doctor and it's then record of the bad health habits we have. So when the insurance company checks our health record, then they be like, oh, they got to pay some more money because they might die sooner than later because they eat too many chickens, eat too much fried chicken, fried fish, and drinking sodas and not exercising. Yeah. So, good thing about getting them while they're young and in good health, you spend less money. Kayla's 50,000 whole life insurance policy is only 40. I don't remember. It's either 45 or 49 a month for $50,000. And when she turned 18, her policy would double to 100,000. But that's not the only thing. Because of the money that I'll be paying into it, I'll be paying more than the premium because I want to jumpstart the cash value in the whole life policy. Bless you. See, you took my sneeze. So, so when Kayla is an adult, if she needs to tap into the cash value of her policy, whatever that cash value is, she'll be able to do so. And it won't hurt her. It won't go on her credit. She'll be able to use it. So, yeah, learn everything you can about whole life insurance, people. Really understand the difference of term life and whole life. Yes, term life is only death benefits. But again, while I'm alive and kicking and doing some things, I want to tap into what I'm paying into before I die. They can get what's left over when I'm done. Okay. Again, don't make excuses that you don't have or make enough money to pay the insurance. Then the next step is for you to make more money. Or you create a side hustle. That'll be your money to put into your insurance policy. Work a second job. Or you just simply budget your expenses to take what you save from that and use that for your premium. So stop making excuses. So that money you dedicated yourself to spend on cigarettes, on alcohol, on name brand shoes, jewelry, all that unnecessary stuff. You got to choose what's more important. Those things are your child's legacy. And if you at this point continue to choose those things over your child's legacy, I was about to say something harsh. I'm not gonna say that. No, I'm not gonna curse. I was gonna say something harsh. I didn't say curse. But I'm gonna change my mind on that. I'm not gonna say that. You need to get your priorities right because your priorities in the wrong direction. I know I can be blunt sometimes, so I gotta check myself sometimes. Not everybody can take that. All right, so a recap on term life insurance. Again, it is only coverage for death benefits and nothing else. You get nothing else from that. You can't do anything with it. You can't leverage it in any kind of way. It is what it is. Money available for your beneficiaries when you die. That's it. I mean, that's good to have. That'll be my number one policy. But all my other policies after that will be whole life for the benefit of taking advantage of the cash value and having the death benefit in the end. Two for the price of one. Let's see. Now you can add your child to your term policy, to your term life policy as a rider. But again, this is just for death benefits. When that child dies, like I said, if something happens to where your child dies before you do, then you will have the death benefit to make sure you're able to cover the cost of their burial, and you do with what you please with the other money. I think that if Kayla were to pass before me and I use her policy to take care of her funeral costs, she don't have no bills. So I would probably start a foundation in her name with that money. So, but yeah, you do what you please. You ain't got to answer to nobody of what you use that money for. You the one been paying on it. They did. Therefore, you are able to afford to cover burial expenses, and again, do as you wish with the rest of your with your child passing away before you. Again, it's an awful reality. It is awful. It's heartbreaking, uh, but it can happen because life is not guaranteed. So this is about being prepared. That's all this conversation is about. The conversation you should have with your family is about being prepared for what happens after your or their death. Put a plan in place. We can't avoid this conversation as parents and grandparents. Whole life insurance is covering for death benefits for your beneficiary and an opportunity of having your own banking system through the cash value. You build within your policy. Now, again, on next week's video, I'm going to give a breakdown on how the money works, how you budget to grow your policy, what you have to do to build up your cash value, because it takes 1 to 2 years before. If you do the regular minimum monthly premium payments, it's going to take 1 to 2 years. Well, actually longer than that. It can take up to 1 to 5 years for that cash value to build. But you can actually jumpstart your cash value by paying a larger amount. For example, if I have $6,000, which puts that at $500 a month, if I jumpstart a policy, I mean a different policy, because I'm going to have multiple policies, and because this is creating a family banking system, it's not just creating policies of death benefits. No, that's not the objective here, which is called infinite banking. But again, you'll learn more about that later. So if I have $6,000 and I put it towards my initial policy, that's going to kickstart immediate cash value because I've already paid up for a period of time on the premiums. Again, I'll explain all that in further detail in other videos. With whole life insurance, you pay the same premium amount for the duration of the policy, which is for your entire life. Now, the difference between that and term life, exactly what it says, term, for a specific time frame. You have a choice of 20 years or 30 years on term life insurance. When your expiration of the 20 years or the expiration of the 30 years on your policy, it ends. All that money you done put in for them 20 years and it expired at 20 years, it's okay. Kudos. You paid during that 20 years to make sure you were covered with death benefits in the event you died. But you didn't die. You're still here. Yay. So same thing with 30 years. You don't put all that money, pay that bill every month in the event that you die within that time frame. So if you want to continue the policy after the 20-year term or the 30-year term, you have to apply for the insurance for a new policy. Now you're older. Now your health probably ain't good at all. So now you worried about whether you're going to qualify for more coverage or they're going to jack you up in the premium because it's going to go up because of your age, your income, and your health. See how that works? Starting young, people. Starting young with a child's whole life insurance policy. They keep it for the remainder of their life as long as that premium is still being paid every month, every year, every quarter, whatever the case may be. We'll go over that plan later. It doesn't change. It stays the same. Yeah, you paying a little bit more with whole life than you are with term life. But like you all heard the phrase before, you get what you pay for. So just break down and go on and do what you got to do for that security plan. And that's what it is, a security plan. Okay? Part of your premium is invested. Now, this is not stock, but the insurance company act the same as a bank, of which the banks actually use whole life insurance to fund what they need along with the money that you put in the bank that they use to grow and make millions off of, but give you zero. So what I'm talking about and introducing to you, the infinite banking, this is about creating your own banking system to where you don't need no bank to do what you want to do or need to do financially. Learn the system, play the system. Just dribble them balls and play that system right. That's it. We learning how to play the system because the system been playing us forever and give us nada. So yes, information, people. Information is powerful, but what you do with it makes it the power. So again, the premium is invested and accumulates into your cash value, and this is the money that is working for you. Unlike the money you put in a regular bank savings account is just sitting there, you putting into it, the bank coming up behind you. Every time you put in deposit money into your savings account, they be like, "Thank you, Miss King. Thank you. We gonna go make a few million off of this. Catch you later." I won't see a dime of that. I won't see a dime of the millions that they done generated off of my little money that I put into the account to let it sit there. Only reason I have a regular bank savings account is so I have some liquid access to cash if I need to. That means quick access to cash. Because y'all know that money that go in the bank ain't really there. It's only a certain amount. You know that, right? Mm-hmm. Yeah. Because the banks use your money to make millions by investing and doing whole life insurance. To do the same thing, the infinite banking. So yeah, people, learn the system, play the system. That's how you win. Y'all ain't gotta believe me. Go do your research. On the last video, I even gave a. Did I post that PowerPoint? I don't think I posted the PowerPoint. I gotta go back and look and see. But it's a link on there to this married couple that I follow called Wealth Nation. Carmen and Darius. Don't let me lie on their last name. But their platform is called Wealth Nation. And I enjoy watching them and yeah, just listen to what they're saying. The video that I posted on the PowerPoint, go back and see that I posted PowerPoint. I did. Okay, I gotta make sure I post that when I'm done before I go lay down. I thought I did, but obviously I didn't. I got to post the PowerPoint that go along with the. Oh, I know why I didn't post it because I didn't do the audio for it. Okay, I'll still post it, and you can just scroll through it, and you'll see towards the last of the presentation the link to Wealth Nation, and the video that I purposely linked on my presentation on the PowerPoint is the one where they um, discuss the misunderstanding that Mr. Dave Ramsey has to whole life insurance and how to utilize it. Yeah. So they break. I like that video because they break everything down. And I'm just gonna say this: we as people, we as people tend to trust other people of other races when it comes to finances because it has been engraved in us that they know better, that they're smarter, that if they say it must be true. And I can say some things that'll prove exactly what I just said, but I'm not getting into that. So again, I follow Dave Ramsey. I believe in 90% of the stuff that he has taught and follow myself. But his word is not the end all to be all. So you have to be open to other logical, provable, factual information. So yeah, when I post it, check them out. Oh, correction. I want to say this. I'm gonna do a little post about this. A correction to something that I had shared on Wednesday about the life insurance. Um, I said earlier on this past Wednesday that the loan that you get from the cash value, because again, you do not borrow against your policy. You don't touch your policy. It's the cash value that you have built up over time in the policy that you can get a loan from. Okay? Getting that loan from the insurance company of the cash value is not reported on your credit. That's a relationship between you and the insurance company, nobody else. I lost my train of thought. But anyway, the you don't actually have to pay that back because if no, if you don't pay it back, that's fine because the insurance company will take it out of the death benefits plus some interest before they pay your beneficiaries. Okay? They're willing to do the loan on the cash value because the value is there. They're not going to miss out on anything. Now, unless you were to cancel the policy, yeah, they're going to come after their loan because they can't get it from the death benefits anymore because you canceled the policy. But for me, I would choose to still pay the loan back. And since I'm not required to, then I can budget and pay back how I want and when I want. But I would pay it back so I would continue to build my cash value and put that retracted value I took out and put it back in to even build, to add on and build what's already still there. So me personally, I would pay it back because I may want to get a loan later for a larger amount and I'll have that access to it. And from what I understand, it only takes 30 days for you to get the loan. Once you apply for it, they're going to give it to you. Whatever your cash value is, they'll loan it to you. So, yeah. Does that not make sense to you all? It's your money that you've paid into, that you built value on. Remember, I talked about how the regular banks, the brick and mortar banks, they take the money that you put into the bank, that's yours, invest it, make millions off of it, and give you nothing. With a whole life insurance policy, they do the same thing with your premiums. They invest the money. You, based on the investments, you build that cash value within your policy, and they give you the opportunity to get a loan to use that money while you living. You can't do that with the regular brick and mortar bank. I'm a Libra. The Libra is a scale. These are the plates, the scales.
That's what
Yes, we're Libras. That's why I chose this image for my logo. But with the information I just gave you, traditional bank, brick and mortar bank, and the whole life insurance, cash value. Come on, y'all. Stop thinking harder more than it has to be. It's just straight common sense. The information is right there. I'm not making this stuff up. If you got term life insurance, call your insurance company and ask them. Call them, ask them, what does my policy do? Other than pay my kids when I'm dead. If you got whole life insurance and this is your first time hearing about how to actually use the cash value in your whole life insurance, call your insurance company. They'll tell you. You ain't got to believe me. So, yeah, that's up to you all. See what else? You can set up your child on a plan of success with financial literacy so that when they become an adult and they take over the premium. Now, when Kayla turns 18, she'll already be working, generating her own income. She's going to take over the premium. And again, I might decide on asking her to pay me back. It depends on what I've already paid into. I have a right. But anyway, she takes over her premium payments. Okay? When she turns 18. So I've already set her up on the path for success. She's going to be building cash value. Her policy is going to increase double. As long as she continues the payments for the rest of her life, she'll have access to cash that she could use for things that she may need to before she dies. And using that cash to help build on other cash. You got to make the right financial decisions and choices. Whatever money you make, whatever money you accumulate, whatever money you inherit, whatever the case may be, if you don't make the choice to make that money grow, making it more than what the value is now, you might as well just put your money in a regular bank savings account, and let it sit there and do nothing. And then when you do need it, it's going to be of less value because of inflation. The system always taken from you. So empower yourself with the information so that no one's taking anything from you. You using what you have earned, and you make that grow. So me setting her up now, although I should have did it before when she was younger, but better late than never. But she's going to be prepared. She's going to have the opportunities in using the cash value of her policy that can open doors for her in so many ways, as an optimal financial resource that she can tap into and get it within 30 days of request. She can use that money to pay for college or pay for certifications. She can buy her first home. She could start a business. She could make investments, especially making investments. Put that money in to make investments, grow your money, take it out a year and a day later, and you could, people, the information is there. We just got to put action to plan. Just do it. Like I said before, the only reason I'm upset with myself that I didn't do all this when I was younger so I can enjoy my money longer. Now I got to rush to do everything I want to do before I die. Naturally, hopefully, of old age. Okay? She can purchase a car, pay cash for it, not worry about no car note. She could create ways to generate multiple streams of income, uh, cover large debt like medical or legal. Any situation can pop up. Be prepared for a joint venture. She go into business with somebody, but she needs a certain amount of money to start that joint venture. And most of us, we get those once in a lifetime opportunities or those rare opportunities that come into our lives, and we're not prepared for it. We can't do nothing about it. We feel sorry for ourselves that we weren't prepared, that we weren't able to jump in with a sure plan. Or she could use that money to build on her retirement. Or put that money to grow the family banking system. I can tell you right now with a good banking, well, doing the the infinite banking system. Okay, if you got a family of 4 and all of you are working, all of you have financial goals, or even a common goal of a family business. If all of you have a whole life insurance policy and you build the cash value in, let's say you only able to get a cash value of $25,000 from each policy, from each person. That's all each policy got, $25,000 cash value. Okay, that's $100,000 people that family can use to really start a business. And they're going to get that money back so they could choose to put that money, pay that money back so they can have a larger amount for reserve later. Because the infinite banking is like it's a legitimate savings, a real savings that you reap the benefits from. If a family of 4, even if struggling, let's say y'all get a policy on, y'all split the premium cost of one policy. Push money into that policy to get that cash value to activate sooner. Push more money into that policy to grow that cash value even more than what it would at its regular pace. Once you get to the point, let's say if it's a $250,000 policy, all the stuff, all the money that y'all push into it to build the cash value and build the policy, you get to the point where you got a cash value of $100,000. And I'm just throwing numbers out because depending on what you do, it'll be more than 100,000. That's creating your own family's banking system. So you don't have to go to the bank for $100,000 loan, which you probably won't even get from the traditional bank. But you ain't got to worry about asking them for nothing. You done created your own banking system. Your family has created your own banking system. We at 5:55. We're getting ready to be done with this because I'm not going to drag this out. So, and although we're talking about getting life insurance to start them young as a minor to help them grow into a better position with a life insurance policy as an adult, also think about the death benefits your child or children inherit from you can help him or her in the following areas. Of course, they're going to be able to pay for your funeral costs, cover your debts, cover their debts, cover their education, use that inheritance as an income replacement, savings or retirement or retirement. Put that twice. Or entrepreneurship. So yeah, I mean, you all know what need to be done. But as long as you keep making excuses of why you don't do something, you your own problem. You the reason you in the situation you in. Nobody else. So tips. When you purchase a policy, ask the agent about any premium discount when you do automatic withdrawals, which I have to check on because after I was doing some more research today, I need to contact my agent and ask him about for Kayla's policy, for the Gerber policy. Uh, they do up to 10% discount when you set up automatic withdrawal, and I set up automatic withdrawal, so I got to check on that. Starting somewhere is better than nowhere, so just get started. Even if you purchase a policy worth $20,000, if you do a policy on a child for $20,000, your premium probably be under $20 a month. You can't tell me you can't afford that because you blow that on stuff stupidly that you buy every day or every week. So you can't tell me you can't afford that. I've already mentioned before, if you have a policy of like 50,000 on a child, it will double when they turn 18. So that's $100,000 that child will have at age 18. Again, never borrow against your policy. You should never do that. You don't borrow against your policy. You get a loan on the cash value of your policy, whatever that may be. Okay? When you turn 18, when you turn 18 years old, generating your own income, plan to pay more into the policy. Like when Kayla turns 18, she may choose to pay an extra 50, so $100 a month into her policy. That'll help build the cash value quicker and build the value and increase the value of her policy. You have to plan for everything. Nothing comes free, nothing comes quick. Y'all got to stop thinking instant gratification. That's irresponsible. All right. And like I said before, everything I said is a definition of savings. Better than the savings of your traditional savings account. It's a win-win situation. So along with what I talked about before, building your child's life record keeping, this is something else you're going to add to it. You're going to add your life insurance policy to your financial portfolio if you have whole life insurance. It's part of the financial portfolio because you're building cash value that you could use for other things while you are living. That's available money. Next steps. At this point, your child should be turned around asking you, Mama, Daddy, do y'all have life insurance on me? If they say yes, ask them to explain what it is. Yes, put your parent in a uncomfortable position. Ask the question. And if they don't, then parents, this is your time to say, okay, Nneka, I'm listening. I'm going to do it. And if you need to be referred to an agent, I can refer you to some agents. Okay? Content covering on next video. Learn more about infinite banking and whole life insurance and see what the money looks like to set the goals to have in place on Wednesday and Sunday. That's going to be episode for this Wednesday and next Sunday. Also, learn the banking accounts or accounts period that you should have when you turn 18 years old and the accounts you should have before you turn 18. If you're going to listen to what I said and open your child a bank account now, while they're minor, there are some accounts you should have now and some accounts you should build on when you turn 18. Because at that point, you don't need your parents to handle your banking. Alrighty. That is it. I thank you all for showing up. I hope that you found some real value in the content shared today. So until next time, take care of yourselves and know that knowledge is real power only when you apply it. And remember, a road better planned is easier traveled. See you next time. Peace out. You ready to go watch the movie and go to bed? I'm tired.